In today's video, I'm going to be discussing a stock market collapse and major recession if the Federal Reserve doesn't act by a specific date. I have all the details and exactly what you need to know right here in the video. Let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons down below. I really do appreciate it. Thank you so much for your support. Also, if you're new here or if you haven't done so yet, please make sure to subscribe to the channel as well. Again, with the big subscribe button right down below the video. Thank you. I really appreciate your support. Thanks for being here, and let's get into it and talk about a major recession and stock market collapse if the Federal Reserve doesn't act by a certain date. Well, yeah, that's exactly what they're saying right now, and I want to bring this to your attention because I've been reading this in more than one source that's out there now, and they're basically putting an ultimatum on the Federal Reserve saying, hey, you got to do something, otherwise we're going to see a major crash and burn of not only the stock market, but the economy as a whole, and this basically the entire country if you don't act by this date. So that's pretty intense right there, right? So I want to bring this to your attention, let you know exactly what is going on here. Now, if you've been watching the videos here on the channel for a while now, or if this is your first time being here, first off, thank you. Really appreciate you watching. But I talk about every so often the meetings that the Federal Reserve has every so often, and it is their FOMC meeting, right? Well, with these meetings, they come out and it's a 2-day meeting where they discuss interest rates and they discuss the economy and all kinds of different things like this, right? And then we get the infamous announcement at 2 p.m. East Coast time where they come out and say, what are they doing with interest rates? Are they going to pause? Are they going to cut? Are they going to raise? What are they going to do? It's a very highly anticipated announcement, but then 30 minutes later, 2:30 p.m. Again, East Coast time, Jerome Powell comes out for the press conference, and that is what is market moving, because then he tiptoes around all the answers and he discusses what they're looking at and what they're seeing with the economy and overall things like this. But here's what's happening. So September 18th, we have an FOMC meeting coming in, okay? So as I film this video, obviously we're before September 18th, but September 18th happens to be the last meeting that they have before the election, okay? That doesn't really matter a whole lot, but I'm just simply saying that is the last meeting that they have before the early November, what's going on there, okay? But my point is, the people are coming out, and I've seen this in a number of reports here now, they're suggesting that if the Federal Reserve does not cut at least by their September 18th meeting, it's basically over for the economy. It's over for stocks, okay? Now, that seems a little bit aggressive in my opinion. I wouldn't put like one specific date or one specific meeting on the whole thing, but here's what I do know, okay? So I think that might be a little bit weird to say like, oh, if they don't do anything by this one meeting, it's over for everything. I don't know. I just feel like that's a pretty aggressive ultimatum. Don't love that, me personally, okay? But I do want to point out a couple things, because I have been saying this for a while now, is that the Federal Reserve has kept interest rates very high for a long time, right? For, what is it, almost a year now? These rates have been very elevated. These are the highest rates that we've seen since, what, 2001, right? So what is that, 23 years ago was the last time that we've seen rates this high? My point is, they can keep rates this high for a while, but the longer that they keep these rates here, every single month that goes by that these rates stay elevated like they are right now puts more and more strain, more contraction into the economy, because it's people like you and me who are not spending as much, because if we don't have the money and we're floating balances on credit cards, that's an ugly picture. I mean, interest rates on credit cards are very high right now. So not sure about you, but trying to mitigate the amount of balance that we're floating is probably the same situation that a lot of people are doing. Well, the same thing applies to businesses, small, medium, and large. Doesn't matter. A lot of people are cutting back on spending because of this. People are not borrowing money. When people don't borrow money, what happens? We don't spend money, right? The whole purpose of borrowing money is to spend it. I mean, that's the cool thing about it, right? You borrow a bunch of money and you go out and you spend it and you buy a bunch of stuff, right? So, I mean, the same situations happens for you and for me and everybody else out there, as well as businesses, again, of all sizes. It doesn't matter, right? So that's the whole purpose of the Federal Reserve keeping interest rates high, is because they want us to stop spending money. Everybody, the less money that we're spending basically brings down inflation, because it's less demand for products and services, and therefore when you have less demand, well, then prices must come down, right? So just simple supply and demand, simple economics, okay? But that's the whole situation here. So every single month that goes by. So in other words, if the Federal Reserve does not cut in their mid-September meeting, that means the next time that they meet for their FOMC meeting would be, November 6th, I think the date is. That's the day after the election, okay? It's the Wednesday after the election is when they wrap up their next meeting, okay? My point is, that's kind of getting late in the year, right? So considering how long they've had these interest rates elevated like this, which, by the way, quick side note, they started raising interest rates in March of 2022. That's a long time ago, right? That's like what? 2.5 years ago, almost 2.5 years ago now, right? That's a long time ago that these rates have been going up. Now, they haven't been at the pace that they are now for that entire time, but they've been very elevated, pausing, holding where they are for a very long time. And again, this is just contracting more and more and more. It's sustainable. They can do it for a little while, but it is not sustainable long term. If they try to pull this off long term, it's going to be a bad, bad, bad situation for everybody, the economy, the stock market, things like this. And that's exactly what these reports and what these authorities and these officials are saying, is that they got to make a move. They got to make a move soon. They got to start cutting. Now, here's the thing as well. I want to point this out. When the Federal Reserve starts cutting, they're likely going to start cutting at a pace of about 25 basis points per time, okay? That's fine. That's generally how they usually move. They usually go up and down 25 basis points, except when they were hiking rates, they came in multiple times and raised, 75 basis points, 50 basis points, things like this. But in general, the Federal Reserve usually raises and cuts at a pace of about 25 basis points. But if they come in and we see them cutting faster than 25, if they come in and start saying, hey, we're going to do 50, we're going to do 75 basis points, that's basically a signal to say, hey, they see a lot of weakness in this economy and they're trying to bring rates down quickly to get ahead of it before the whole thing spirals out of control and it just turns into a fireball and crashes to the ground, right? Good analogy, right? So I'm just saying, use that as a signal as we go forward and we see what happens here, especially with the September meeting. If the Federal Reserve cuts then, which there's a lot of discussion about that because a lot of people are saying, hey, he's going to cut, as in Jerome Powell. A lot of people are saying, hey, he's going to cut early to make it look good for the election. And again, I don't want to sit here and turn this into a political discussion. We can certainly do that if you want to. I don't really want to. But I'm just saying, if he does that before the November election, I think a lot of us would have to say, yeah, that's probably politically motivated, right? But at the same time, if he doesn't, then I guess he's holding his ground and he's following through with what he said, which is we're holding tight until inflation goes down, until we see evidence that this inflation is going down and going to stay down. So he's been saying that for a while now. A bunch of people have been out there calling his bluff and saying, he's not going to hold tight. Are you kidding me? He's gonna flake immediately and he's going to start cutting right away prematurely, and he's going to do that. Well, we'll have to see. He's been pretty steadfast so far. I'd say he's been rock solid, even though there's been a lot of people out there saying, Jerome, Federal Reserve, you guys got to cut. You guys got to cut now, right? But he's been holding steady. I have to give him credit for that, right? But we'll have to see what happens here going forward. Just want to throw this out there really quickly. And remember, if stocks go down, if the economy goes down, it's going to purge a lot of things out of the economy. I say this in some videos sometimes. A recession is not necessarily a bad thing. A lot of people have this negative opinion about a recession. A recession should be a great thing, okay? Think of it this way. If we get a recession, cross our fingers and just think of it as like a blessing that we got, okay? Because it's going to help a lot of things. It's going to bring inflation down. It's going to bring interest rates down. It's going to make money cheaper. I mean, here's the thing. Money's very expensive right now. If you're trying to borrow money, it's not a fun time. It brings the interest rates down, which makes money cheap again. When money is cheap, we can all borrow money. We can buy the things we need. We can do the necessary upgrades we need, whatever it happens to be, and the party rolls on. When money is cheap, the party is fun. The party rolls on. And it's a good time, right? When money's expensive, it's tough. The economy's tough. The economy's tight. Nobody's spending money. Everybody's racking up credit cards and paying that interest. It's just not a fun situation, okay? So does that kind of make sense a little bit? I hope this helps you. But again, just want to bring this to your attention really quickly. Of course, I'm going to continue watching all this very closely. As I get more information on anything, I will bring it to you right away in these videos. So again, please subscribe to the channel. Big subscribe button down below. Like the video, share the video. Again, buttons down below. Otherwise, check out the other videos here on the channel, the thousands in the video library, the ones I've hand selected for you down below in the description or the top of the comment section. And right now, popping up your screen as well, you'll see some videos there. Take your selection now. Thank you so much for watching. Really, really appreciate you. Have a nice day. Take care, and I'll